Hi guys, so here is a quick wrap up of what happened today in markets. So this is a follow-up video from last night's daily forecast. The reason why I'm doing this, I've already explained to you guys, is so that you understand how I approach the market on a daily basis. So if there's an opportunity, I will get into that trade. But if there's no enough evidence for me to get into the trade, then I will not. So looking ahead to tomorrow quickly, let's have a look at the calendar. So tomorrow is going to be quite a busy day in terms of central banks. I think we've got 2 or 3 on the calendar. I know for sure we've got Bank of England, and then we have ECB. So you can see there, tomorrow is quite a chaotic day, and to start right just after London Open, where we are going to get PMI, service PMI numbers from Italy, Germany, and also the Eurozone. Now, we also have PMI numbers from England, and these are going to be quite huge in terms of volatility that we are going to see leading us into the Bank of England, which is like around around 2 o'clock. We've got Bank of England. So you need to be well aware of how to approach the markets, especially on pound pairs. We also have ECB coming in at 2:45. That's like 45 minutes after the pound rate decision. So you can see strategically how these fundamentals are placed. You are never gonna get, it's very rare to get a scenario whereby you get Bank of England and ECB releasing their rate decision at the same time. So there is telltale signs that Bank of England is going to increase their rates to 0.5%. If they do that, expect pound USD to find a bit of strength, right? We've already seen that. So most probably the strength has already been priced in, and it might not move that much since we also have ECB on the calendar. Then later on during the day, we've got non-manufacturing PMI numbers from United States. We also have the Bank of England Governor Bailey. He'll be speaking at 4:15, and before that, we've got the ECB press conference. So expect quite a lot of volatility in the market tomorrow. And my advice to you is, if you are not in a position leading up to those fundamentals coming out, do not risk your hard-earned equity on a fundamental which you do not understand how the market will react. But if you are in a position leading up to the release and that position is in profit, make sure you lock in some of your profits. Now, with that said, let's look at Euro USD, and you can see Euro USD ultimately reached for $13, which is what I anticipated yesterday. After having the inflation numbers, which came out generally positive for the euro, we saw euro rallying from $12.70 all the way to $13. That was a very good, nice long entry, yielding roughly about 30 or so odd pips. Now, some might say 30 pips, that's nothing, 20 pips, that's nothing, 50 pips. But the fact that with the strategy that I'm teaching you guys, you can be able to harvest 30, 40, 50 pips every week. And you know what that does to your equity? That's gonna have a huge impact to your equity growth. So now we have reached the target which we were expecting today. Strength in euro and weakness in dollar. And dollar, as I mentioned on the group, that 95.89 is the draw on liquidity, which is just below our equilibrium point of this range here. Now, looking ahead to tomorrow, mainly we have ECB and we also have Bank of England, right? So ECB is our main instigator for tomorrow's price action. I don't see ECB changing their rates anytime soon. Most probably after the Fed, yeah, then they might need to look at maybe increasing their interest rates. But as of now, the inflation in the Eurozone is still at a manageable pace, unlike in the United States. So I don't see any change coming in from the ECB. Now, with that said, I expect dollar to find a bit of strength to push to the upside. But now, since we are right at the equilibrium point, just below the range equilibrium, I would like to see signs that price is now going to move away from the equilibrium point, either to the upside or to the downside. How do I do that? By going on to lower time frame. You can see here we broke the range equilibrium, which was at 96.20. Broke it to the downside and market kept on tumbling all the way to this low here, which was the draw on liquidity, internal range liquidity in the form of sell stops. So now what I want to see is if the weakness that we have seen in dollar, which has already been highlighted in the interest rate markets, if that weakness is to continue, where do we need to see price trading to, right? The first area of focus, if the weakness of dollar continues, if the ECB come out with positive news for the euro, we are likely to see dollar trading to these lows here. We are likely to see dollar trading to these lows, and it's coming in right at this is now for tomorrow, guys, 95.52. That will be the first target for weakness in dollar. Then the second target for weakness in dollar, we are looking at this level here, right? You can see we've got imbalance here after this sell side liquidity, and this is still internal range liquidity. You can see we've got internal range liquidity there in the form of sell stops. So 95 100. 95 100 is our second target for weakness in dollar. 95 target could be most probably if we get also a negative NFP. Tomorrow might be a bit of a stretch for 95 100, but if we get a negative NFP, then we should see dollar trading all the way back to 95 or ultimately 94 600. But that's a bit of a stretch in terms of price action. Now, if it's a case that ECB comes out positive, that's when we're going to see the weakness in dollar continuing, and then the strength in euro is also likely to continue. To continue to which levels? You see, you need to be in a position to ask yourself, where is the draw on liquidity? Where is the market likely to trade to? Now, in terms of strength for euro tomorrow, we're looking at this short-term high here. That's our first initial target for strength in euro. So you're looking at $13.60, and then further ending the week, you are looking at price trading to this bearish order block right here. Now these are like intermediate term targets. I'm not saying it's gonna reach it tomorrow or by Friday. These are intermediate term targets, such that you need to be well aware of this price also in the coming week or 2 weeks from now, because it can happen that euro gets weak, right? Or there's weakness in euro, then it trades back to $12.70. But by the time it approaches say $12.70, then there's like positive news, then it's gonna shoot up again all the way now to clear up this internal range buy side liquidity above $13.60. Now the opposite applies. If ECB comes out dovish, right? If they do sound out more dovish, the ECB, then expect euro to trade back below $13 and ultimately below $12.70. So be in a position to know where price action is prior to the event, prior to the news being out there, is crucial in you understanding where, in which direction to trade to. You see, right now, price on Euro USD, right? Price on Euro USD is still inside this swing high and swing low range, and it's now approaching 50% mean threshold of that range. But ultimately, we are inside this huge range, swing high, and also already this swing low that has been created here. This is no longer external range liquidity now of sell stops. Those sell stops are now right here, right under this low. So I'm just gonna highlight them. You see, we now have external range liquidity there in the form of sell stops. These ones have been taken out. They've been violated. So I'm gonna put a tick there, and then these ones they're still standing. I'm gonna put an X right there. It tells me that the liquidity is still in place. Now you can see where euro is finding a bit of resistance, that is inside this base. We then drop, base, drop. Now we are back again at that base. So there could be a bearish continuation setup forming on Euro USD, but we need a clear confirmation now that we can see lower prices. So what I'm saying is, from the supply and demand notes, we had a drop and then base, and then we had another drop. Now we are right back here at the base, and then for bearish continuation we need to see this base providing what? Resistance, and then price continues going to the downside to take out this external range liquidity. That's an intermediate intermediate target for Euro USD, because you can see all the gains, the weakness, the losses that it incurred last week during FOMC. Euro USD has erased all those losses. Same applies with the dollar index. All the gains that it made yesterday, last week, because of FOMC, all those gains have been erased. So knowing how to react when ECB comes out, of which I'll keep you guys posted in the group on what to expect, will be crucial now for either shorting or going long. So the fundamental I'm talking about is coming in right at quarter to 2 ECB rate decision. That's like 4 or 5 minutes after Bank of England. Then pound USD, you can see we're now also trading into this up candle here, where we should anticipate price to find resistance. So if they do increase the rates, then expect this level not to hold. Price should trade to the upside. Now you need to ask yourself, where's the draw on liquidity to the upside? We've got this short-term high, right? That's on a rate increase from the ECB. Should see price trade to the upside. Should see price trade to the upside all the way, targeting internal range liquidity around 1.36610, and intermediate target is to clear up this this high here, where we have also again internal range liquidity, because we've got a swing high here and a swing low here. Then price came probably into optimum trade entry, traded to the downside, created a short-term range inside this ultimate level. So yeah, that's pretty much the summary for today. And you can see the longs that I was anticipating in Aussie dollar, New Zealand dollar, and also pound USD, where I emphasized that if we do see a weaker dollar due to the positive inflation news for the euro, then these guys would have rallied to the upside. You can see here, this is NZD USD. It did rally, but not much. And now there's been a very huge retracement from the highs of today. Same applies with the Aussie dollar. It did rally, and then there's been a huge retracement from today's high. Today's high found resistance inside this imbalance right here. That means USD CHF is going to find support, and also USD CAD is likely to find support from this down candle. So yeah, that's pretty much about it for today. So take note, the draw on liquidity for dollar index, provided we get strong, we get a dovish ECB. If we get a dovish ECB, then euro might struggle to keep trading to the upside, thereby providing support for DXY. So yeah, that's pretty much about it for today, folks, and wish you guys good luck and happy trading. Thank you.